So what is infinite banking? Well, in this video, I'm gonna go over what it is, how does it work, and who uses it. To sum it up, infinite banking is like a revolving credit card. To go into more detail, it's a high cash value, whole life insurance policy with a mutually owned insurance company that's been around preferably over 100 years and has paid a consistent dividend for over 100 years. Wait. Hold up, what did you just say? Let me break it down for you. So high cash value, whole life policy, what does that mean? Well, I want you to think of whole life as a pie chart, and high cash value meaning that when you have, let's say 8 slices, 2 of those slices are gonna be the death benefit and 6 of the slices will be the cash value. So that is your access to the money. Now, normally policies are designed and you might have 6 or 7 slices of death benefit and maybe 1 slice of cash value, especially in the early years. That's not a policy that's been designed for infinite banking. So mutually owned company, what does that mean? Well, there are stock held companies and then there are mutually owned companies. Stock held companies are where somebody goes in and they buy and they invest and the investor gets ownership in the company. So mutually owned means that when you purchase a policy with the company, you are the owner, you are the investor. And so why is that important? Well, companies always want to take care of their investors. So stockhold companies take care of their stock investors. Mutually owned companies take care of their policy owners. And so when there's dividends and profits, a stockhold company is going to pay that to the investor first, the stockholder. A mutual company is going to put that right back into your policy. And so that is the importance of a mutual company when using infinite banking. So company that pays a consistent dividend, preferably over 100 years. So what does that mean? Well, you want a mutual company that stood the test of time and went through all the worst economy, the Great Depression, all the wars, dot-com bubble, etc. Now, they've gone through those worst economies and they still paid a dividend, which means that it's a very stable company. And when you're looking at an insurance company, that's something that is really important. Let's jump right into how does infinite banking work? Before we get into how infinite banking works, you gotta understand how banking works. When you deposit your money at the bank, a lot of people don't know this, but you become a creditor of that bank. Wait a minute, what? Well, when you deposit your money in the bank, it's actually in the contract says that you are giving the money and all the rights to those dollars to the bank so that the bank can then take those dollars and loan it out and make a profit. So banks in a sense work by keeping your money safe and then loaning it right back out. And they do it a couple different ways. One, they borrow all our money and then they take it out and they loan it out in credit cards, in all kinds of different loans. But they also get money from the Federal Reserve and they borrow that money and then they create more loans with those dollars and they profit. Sounds like a really good way for them to make a lot of money. They pay you very little interest on the money you deposit and they charge a whole hell of a lot of interest to make profit. Sounds like a good idea. Now that we understand how banks work, let me explain now how your whole life policy works as your infinite bank. So when you start funding a properly designed infinite banking policy with a whole life, you have access to the cash value inside of there. If you go back to that pie chart, you get access to the cash inside of there you put in there. Now that money, instead of earning 0% or nothing like it is in the bank, it's earning anywhere from 4 to 7%, and that depends on the company, inside of the policy. So now your money's working harder inside of the policy. But that's not where the magic happens. The magic actually happens when you take the money from inside of the policy and you go and invest it. Now, are you actually touching the money inside of that? When you tell the insurance company that you want $50,000 of that money that's inside of your policy, they're not actually taking it from your policy. They're taking it and they're loaning it out to you from their pocket. So the money that's inside your policy is still earning as if you never touched it, while you're taking that money that you asked for and borrowed from the insurance company to invest it in something like real estate, businesses. Maybe you purchased more stocks. Maybe you used it to purchase a car or things that you need or want, or maybe you used it to pay down your debt. Those are all different ways that you can use this policy. Now, let's say your real estate investment does well and you make money. What you're supposed to do, and this is why it's called infinite banking, is you take those profits and you put it right back into your bank account. You got to pay off the loan. And it's infinite banking because you repeat the process. You borrow the money, you make money, and then you put money right back into your policy. And that's why it's called infinite banking. So what types of people use this? Well, if you've seen in a previous video, Walt Disney used it to start Disneyland. A lot of business owners like the McDonald's owner, JCPenney, Foster Farms, they've all used this. Many business owners that you know of don't use this. 85% of the wealthiest people in the world use this policy. Families like the Rothschilds, the Rockefellers, the Phipps family, they all purchase whole life policies on their young so that later on they're able to use these policies. And guess what, you guys? I don't know if you know this. I've done it in a couple of videos before, but the very banks that you bank with and that we all bank with, guess what? They also purchase whole life policies with the money that we deposited, and they loan us the money from the cash value. So if you're an investor and you're a hard money lender, I've met hard money lenders that do the same thing. They borrow money from their policies and they loan it out. You could do the same thing. So now that we understand this mindful money concept known as infinite banking just a little bit more, if you want to find out if this is right for you, go ahead and reach out to me. If you want to see how Walt Disney used his infinite banking policy, go ahead and click on this video right here.